So, any questions regarding what we went through yesterday regarding market structure? Anybody or anyone?
I think it was pretty clear. I mean, obviously, it's probably gonna take some going through it a few times, or maybe a couple of times to, because I was just watching it earlier, and I noticed some things I thought I understood them completely yesterday when you were talking about them, but rewatching it, I realized, oh man, he did said that. And so maybe watching it again and continuing to make new notes is definitely gonna help it stick in the brain.
Yeah, I know you have
Yeah.
sometimes look at the videos couple of times to basically to catch a couple of things. You know, that's what happens almost with everybody. Like sometimes that's what I said when you guys review the video, and it's better just to do like kind of one video per day or one topic per day because that way you guys can review it and know exactly what we're talking about in that specific video. And every time you guys have questions, when you go back to the video, you actually find almost the answer on the videos. But yeah, I mean, that's good that you guys have understood everything yesterday. So today we're gonna be talking about order blocks and liquidity graph. Okay. So same thing. If you guys have questions, just let me know, and we go over your questions and everything. So when it comes to order blocks, for there's different ways to call that. People call it POI, point of interest. Demand, supply and demand zones could basically the same thing. Bank candles. There's a bunch of different names that people come up to call the same thing, which is order blocks. For me, an order block is going to be like a level that I'm looking at the market to react when I'm looking for a setup. So for me, if we're talking about an uptrend, like say we're creating higher highs and higher lows, I'm gonna be looking the last bearish candle before a break, or that bearish candle that create a new break of a structure. So like say we're creating higher highs and higher lows, we have a new break of a structure right here, okay? And I'm gonna be looking for the last bearish candle as my order block, my bullish order block, okay? It might happen as well. The market try to breaks above here, do another pullback before the break and do something like that. And then I'm gonna be looking for the last, as I said, bearish candle uh as my order block. One thing that you guys had to click had to have in mind is that we don't care or we don't mind which like what's gonna be the order block that's gonna work because a lot of people always said, "Oh, I don't know which one is gonna be the best order block. Is the one that has imbalance before the order block, have a fair value gap before the order block, like couple of things that people actually try to find like which one is the best order block. In this strategy, you don't have to worry about it because we're not gonna be taking trades based on reaction. What I mean by reaction is that I'm not gonna be taking a trade if market go like say price go to the order block and tapping into the order block and have some weak reaction from the order block. I'm not gonna be taking a trade like that. For me to take a trade on an order block, I need to see price action or patterns on the order block confirmation in order for me to take the trade. So in this here, we don't have to worry which one is going to be the best order block to use, which one is going to be the one that's going to hold. We're just going to be waiting for the market to get there. Once you get there with the price and the confluences and the confirmation, the market's going to tell us that if that order block is going to be enough for us to take the buy or the sale. So we don't have to worry about like which one is the best. We're just going to mark up the most recent order blocks or the ones that are basically close to the price, because that's one thing. There's people that we have an uptrend and then come all the way down here to mark up this order block when price is here. It's like, does it make sense for you to mark up an order block that is, I don't know, 1,000 pips away from the current price? So we're always gonna be looking at for those recent order blocks, the ones that are close to the price, and we're just gonna wait for the market to get there for reaction. So we don't have to worry about which one is gonna be the best. As I said, we're gonna be waiting for the market to get there, and the price action and the confirmation is gonna tell us if it's gonna be enough for us to take the buy or the sell on that order block. So that being said, as I said, so for me on an uptrend structure, our order block is gonna be the last bearish candle before the break, or the one that create the break. There's gonna be another one, like say market do a pullback and do another bearish candle and then do the break. This one right here, a lot of people call it the decisional because it was like the pullback that actually created the break, the final break, right? So like I said, for us on an uptrend, it's gonna be the last bearish candle before or the one that create a new break of a structure or a new break. Same thing happens on a downtrend. So for me, order block for the sale is gonna be the last bullish candle before, the last bullish candle that actually create a new break. So we have a break of a structure here, our new lower low. Then I'm gonna find the last bearish the last bullish candle that create this break. It can happen as well, the same thing. Market try to do another maybe double bottom, maybe do another pullback and do a new break. At that point, the same thing we're gonna be looking at for the last bullish candle that create the break of a structure. The order blocks here, we had to keep in mind that we're gonna be marking it up wick to wick. It's not gonna be only the body. It's gonna be the whole candle wick to wick, and that's when we're gonna be marking up the order block. Okay, it could be a doji or anything. Like a lot of people say, oh, which one is gonna be the order block between all the candles? It's gonna be the last bearish candle. It's gonna be the last bullish candle. It doesn't matter how big the candle could be, or if you have a lot of volume on the candle. It's gonna be the last bullish candle and the last bearish candle. That's simple. If you wanna see a color, it's gonna be the last red candle for bullish and the last green candle for bearish. That's simple, okay? So no, the time on the top when it comes to the time frame, there's gonna be order blocks in every single time frame. 1 minute, 4 hour, 1 hour. What I do mainly for markups is gonna be marking up the 4 hour and the 1 hour order block. We're gonna be using the 5 and 15 order blocks, but I'm gonna be only using this time frame when I'm ready to look for a setup, or I'm ready to take a buy, or I'm ready to take a trade. So the 4 hour and the 1 hour are gonna be like the main ones I'm gonna be marking up. I also mark up the daily, but like I said, for me to mark up an order block, market had to be close to that level. I'm not gonna be marking up order blocks like crazy because I like to have everything clean to just look at price action and market structure for me to understand where I'm looking at and where market is going. So I don't like to mark up everything. So I just make sure I just mark up the ones that are close to the price, and I mainly focus on the 4 hour and the 1 hour. We also mark up the daily, but as I said, once I get to once market is getting close to that specific price or that level, okay? On the 5 minutes and 15, we're gonna mark it up, but we're only gonna mark them up when we're looking out for a setup. And we're gonna go into a couple of examples so you guys can understand what I mean. So there's gonna be order blocks internally and externally. Same thing as we talked about yesterday on market structure, that we have external and internal structure. We also gonna have order blocks internally and externally. So let's say we're in an uptrend right here, 4 hour. Okay. So I'm looking out for same thing, my order block, which is gonna be the last bearish candle that create this new break of a structure. I have my swing high, which is gonna be my higher high, and I have my swing low, which is gonna be my higher low right here, right? So I have this order block right here, and market is gonna be creating a pullback. Like you guys we talked about yesterday. When the pullback, market is gonna create a minor downtrend structure, which is gonna be just a pullback in internal structure. Okay, so when we're gonna be looking at market creating lower lows and lower highs, as market goes down like this, it's gonna create internal order blocks for sales, something like this, okay? Right? Same thing, right? If market's trading new lower low, basically the last bullish candle is gonna be our order block. But when it comes to the internal structure, I'm not gonna be marking up those order blocks for sales because I'm not looking for sales. I'm only gonna be waiting for the market to switch back again into an uptrend, and then I'm gonna start marking up the order blocks for buys. So on the internal structure, we're only gonna mark up the order blocks that are aligned with the main structure. So if I'm looking for buys, I'm gonna wait for the market to start breaking a structure to the upside, and I'm gonna start marking up those order blocks right here, right here, order blocks for the buy right here. Okay, market continue going like this. We're marking up the order blocks for the uptrend. So I'm not gonna worry about the sell order block. I'm not even gonna mark it up because I don't need it as I'm not looking for sales. Okay, so simple. We're gonna have external and internal order blocks, but we're only gonna mark up on the internal basically a structure. We're only gonna mark it up when it's aligned with the main structure. If we're looking for sales, we're gonna be marking it up for the sales only. If we're looking for buys, we're gonna be marking it up for the buys only. So that means all those minor order blocks on the sales side internally, we just ignore it and we just focus on the buys on the buy side once market start breaking to in our favor, okay, to the upside. All right. So it makes sense here for you guys. So we can go into real chart.
Yep.
Let's go into 4-hour. Okay, let's go here. I'm gonna go to the uptrend first and then downtrend. We're gonna look into replay mode here. Let's see how we can do something like here. All right, so right here, we're gonna do a couple of markups first. We're gonna mark up first the order blocks on the bigger time frame, and then we're gonna go into internal and external so we can see everything. So right here, we have a new break of a structure, right? Right here, break of a structure. Boom. We have a new break of BOS. So what I'm gonna be looking at here, my last bearish candle that created that break. So which one is gonna be? Here, this is what I just said a couple minutes ago. I'm not looking for the one that has more volume. I'm looking for the last bearish candle. So for me, this is a bearish candle, even though it's a doji right here, but it's a bearish candle here for me. So that's gonna be my order block right here. Okay. All right. So we have a new higher high. We continue looking at. So we have a new break of a structure right here. Boom. And what's going to be our order block? The last bearish candle before the break. So we're going to mark up, as I said, wick to wick. Okay. We have another break of a structure right here. Boom. Break of a structure. I'm going to be looking for the last bearish candle before the break, which is going to be here. Boom. All right. All right. So here, okay, no, it didn't do anything. Okay. Why is it doing like that? All right. So here you guys can what we went yesterday through, we have our swing low here, which was wick transferring from here to here, here to here, and here to here, right? So we never breaks below the previous high or low. So our swing high is going to be this one right here, which is our higher high. So here, if we go into wick transferring as well, we know that now for us to break and create a new higher high, market had to go and break above this one because it tried to break, fails, and create a wick higher than the previous one. So now it's going to be our swing high is going to be here. But what happens internally here? Because remember that this is your swing high and this is your swing low right here because this is your lowest point, wick transferring here, okay? So here you have internal break, which is going to be here. Boom. So that's a break of a structure internally. And you also have an order block here internally. So I can, as I'm looking out for buys here, I can mark up those order blocks for buys. It's going to be something like this. Okay. All right. So we have another break of a structure right here. Boom. Right here, I don't see any bearish candle. Maybe that's something that has to do with trading view. But for that, we just continue with this one as we don't have any bearish candle right here. Okay. So we have another break of a structure right here. Boom. And we're going to find the last bearish candle before the break, which is going to be this one right here. Boom. Okay. So that's basically how we mark up the order blocks, basically on the 4-hour. We're going to do this on the 1-hour, 4-hour, as I said, mainly. But this is how we mark up the order blocks right here. Okay. That's so super simple to follow. Let's go into a downtrend, and then we're going to go into the internal order blocks on the lower time frame and things like that. go into sell something like this, right? So right here. So here we have a new lower low right here. You guys can see new lower low. So I'm gonna look for the last bullish candle that create this new lower low, which is gonna be this one. Okay. Okay, boom. We have a new lower low right here. So I'm gonna find the last bullish candle before the break, which is gonna be this one. All right. All right, you guys can see the importance of understanding wick transferring. Here, market haven't created a new lower low. It's just wicking and wicking. It needs wick transferring from here to here to here to here until here. So we don't have any breaks. And for market to do a new break, you have to break below here with a body candle to have an actual new lower low. All right, so we have the new break. So now we have the last bullish candle, which is going to be here before the break. All right, another break right here. We have the last bullish candle, which is going to be here. Okay. All right. Right here. So as you guys can see, this is our swing, right? Market didn't break here because the wick transfer from here to here. And this one actually didn't break either because the wick transfer. So we have to break below here for me to have a new lower low. So now we have the break. So I'm going to be looking at for the last bullish candle before the break. It's going to be this one. All right. So one thing that you have to keep in mind as well is that our market not always is going to go and do a retracement back again into a 4-hour order block. That's why we're going to be marking up the ones that are close to the price, which is going to be what we're going to be using also 1 hour and 15 minutes and 5 minutes order blocks sometimes for us to look for a setup. Because if you're gonna be expecting the market to do a full retracement back again into a 4-hour order block to look for a setup, then mainly you're gonna be finding maybe 1 or 2 trades a week, because the market doesn't do that often. Okay, so that's why we're gonna focus on looking at also 1 hour and 15 and 5 to look for setups. But we mainly focus on the 4-hour, 1 hour, and then find those minor order blocks that can be more close to the price, so we can get into trades that might not do the full pullback into the 4-hour order blocks right here. Okay. So when it comes to what I said about the internal order blocks and external, so here you guys can see we're gonna go into an uptrend first, and then we're gonna go to a downtrend right here. So something like this right here. Okay. We have a clear break to the upside right here. Boom. So that's our break of a structure. I have an order block right here in the 4-hour, the last bearish candle. I have a swing high, which is going to be here, my higher high. And this is going to be a swing low, which is going to be my higher low, right? So now I'm going to be dropping to the 1 hour, right? And you guys can see I have the 4-hour order block right here. But when I go to the 1 hour, I have one that is more close to the price, which is going to be this one right here. Boom, right? And that's what we're gonna be looking at for order blocks on the lower time frame, like dropping, right? We're gonna go 4-hour, 1 hour, and sometimes we have to drop to the 15. So what happens here, right? So we talk about internal order blocks and external. So here you guys can see that the market is doing a pullback. It went right into the 1-hour order block, but we have a break when market was doing the pullback, which is gonna be here. Market clearly do a new higher low, lower high, and break. So internally here, we have a 1-hour order block. But I'm not going to mark up this order block because I'm not looking for sales. I'm looking for buys. So that's what I meant by on the internal structure, we're only going to be marking up the internal order blocks when they are aligned with the main structure, which is in this case is going to be buy. So for me, I'm gonna mark it up, but I know it's an order block here. If I go to the 15 minutes, same thing. You guys can see that we have order blocks for sales, which is gonna be the last break that happened was here. So this is gonna be my bullish candle for a sell order block. I'm looking for sales. No, so I don't have to mark up those order blocks right here. I'm just gonna make myself more complicated when it comes to mapping my structure. So what I do, I know I'm in a downtrend here because you guys can see that market's doing a pullback and it's basically bearish right here. So what we're gonna be doing? We're gonna be waiting for the market to give us a break in our favor. Okay. Haven't done anything. All right. So here we have a break right here, I think. I mean, yeah, we have a break right here with this candle right here. So that means we have a break of a structure in our favor. So now I can mark up my order blocks for buys right here. And I also have another order block right here. So I have two order blocks. That's when I'm going to start marking up my internal order blocks because I'm looking for buys. Okay. And then I start using my order blocks for buys. You guys can see another break of a structure right here. I mark up my order block for buys right here. All right, another break of a structure right here. Boom. I find my last bearish candle for that created that break. Another break here. Boom. I'm finding the last bearish candle, which is going to be this one right here. All right. And so on and so forth. You guys can see how I know the market has some internal bearish momentum here with the pullback, but I'm not going to be looking at first. I'm not looking for sales. Second, I'm not going to mark up order blocks for sales here because I'm not looking for sales. And I'm going to be waiting for the market to start switching back again into an uptrend. And once it's doing, at that point, I'm going to start marking up my order blocks for the buy because they're aligned with the main structure right here. Okay. So that's basically how we're going to mark it up the order blocks. We're going to go to the 4 hour, 1 hour, and then internally 5 and 15. We're going to be looking at for those order blocks as far as they are aligned with the main structure overall. But one thing that happens is that I think yesterday I didn't went through that example, but I said that if 4 hours is bullish, right, and 1 hour is bearish, we can look for momentarily sales, right, until market get to a certain levels, right? I remember that I said that, but I didn't went through examples for that. So if I have an uptrend on the 4 hour, right, and we already know we have our swing high here, our swing low right here, and we have our order block right here. So let's say on the 1 hour, market do this on the 1 hour. Break number one. Remember that we talked about yesterday that when market do one break in any single time frame, we see that as only liquidity grab or a pullback. When you have two breaks back to back, that's when we know internally market is bearish. So in this case right here, with the second break on the 1 hour, that means that internally we have the 1 hour bearish, but we're still bullish on the 4 hour. So we said yesterday, 4 hours bullish, but 1 hour is bearish. We can look for sales momentarily until market get to a level of interest for us to continue with the buy. So here my order block is all the way down here. So that means I have a possible work level, or I have a range that I can work with, which is going to be from here to this order block right here. So at that point, and only at that point, I can mark out my order blocks on the 1 hour right here and look up for possible sales until market get to the level of interest, which is going to be a 4 hour or even a 1 hour order block that goes with the main structure, which is in this case is by uptrend. And at that point, we wait for the market to switch, and then we do the same thing, marking up our order block that align with the main structure right here. Okay, so that's what I meant by looking for momentarily sales. If we have the 1 hour bearish, if it's bearish internally, we can wait for we can look for sales until market get to a certain level of interest.
Vlad, can you hear me?
Yeah, I can hear, bro.
Yeah, just a question. Isn't it recommended to just play with the trend, and white is more probabilities?
Yeah, yeah, 100%. Like I said, I'm just giving you the information for you guys to be able to understand everything that's going on in the market. And you might say, okay, why market was selling here? And you might see this kind of scenarios and you might understand it. You don't have to take it. As I said, that's something that's going to be up to you for you to take it. Doesn't mean you have to take it. Okay. But just showing you guys everything so you guys can have like the same way that I see market structure and be able to react in case that you see something like that on the market. Okay. Does it make sense for
thank you, Vlad.
everybody
Thank
here?
you. Yeah.
Yes. Hey, Vlad. So real quick, along that line, right? If in an event you're looking at this momentarily bearish movement internally, and you're sitting on the 1 hour, and you maybe say you're considering taking the sell, right? Would you switch back into the 5-minute time frame, or still leave it on in the 1 hour time frame?
No,
As you're
yeah, I
looking at
mean,
the internal?
right now what we're just looking at is marking up and understanding market structure and order blocks.
Yeah.
We haven't talked about price action, which is basically the type of entries that we're gonna be looking at. So
Okay.
everything we're gonna be looking, I mean, let's say that, I mean, when we talk about market structure and entry or price action, yeah, when market get into the 1 hour and go into the 1 hour order block, at that point I had to drop to the 5 minutes, and I'm gonna be looking for specific setups or price action for me to take the sale. The same happens if market go into the daily 4 hour order block right here. I'm gonna drop to the 5 minutes and look for confirmation for me to look for the buy. So as of right now here, we're just looking at, as I said, order blocks and market structure. When it comes to the entry part, you guys are gonna see that we're gonna be looking out for a specific thing, and I'm gonna show you the 3 type of entry that I look for in the market, and so you guys can be ready to take the sell and the buy with that confirmations. Okay, so don't worry about that. But definitely we're gonna be dropping to lower time frame to look for the entries. We're not only gonna be taking the trades based on 1 hour time frame only. Okay.
Got it. Thank you.
All right. So everybody's clear here when it comes to when to look for momentarily sales or everything else.
Yes.
All right. So I see a question here. Why will we sell against the trend? Like I said, you guys doesn't have to sell here. It's just giving you the information so you guys can have the whole picture and understand when market's doing something, and you be aware of that. So it doesn't mean you have to go for the sale. I take my sale sometimes like this, but you don't have to do that if you don't want. If you just want to wait for the market to get to your level, and then definitely that's something that you guys can do and wait for the structure to be back again on bullish and start looking for your buys. Okay.
Yeah, my question was because maybe being new, you will just see entries everywhere. At that point, you want to sell and you want to buy. So
no. Of course, but like I said, that only is scenario is gonna be if the 1 hour internally is bearish and you have a range to work with. But let's say you have 2 breaks on the 1 hour. Let's say something like this, right? And let's say market do like this, break number 1 and break number 2. But the 2 breaks literally going into the 1 hour on the 4 hour order block right here. At that point, yeah, you have the 1 hour bearish, but you don't have any room to work with. You're already into the 4 hour order block, which is bullish. So at that point, you can now look for sales here. You have to be looking for your buys, So it's not gonna be like, oh, on 5 minutes, I'm looking for sales or I'm looking for buys. For you to be looking or even think about looking for a possible sale momentarily, like I said, you need to see the 1 hour bearish basically internally, and you have to have a range that you can work with until market get to a certain level of interest. In this case, it's gonna be a 4 hour order block. If you don't have this scenario right here, and you don't have any room to go down, or you don't have the 1 hour to go down, then you're not gonna be looking for sales. If you see this kind of scenario on 15 or 5, forget it. You continue looking for buys. That only case that you might be looking for sales if you want is only gonna be if the 1 hour end up ending starting bearish momentum internally, just a 1 hour. If it's 5 or 15, you're not even thinking about looking for sales or anything like that. Make sense? All right.
Yeah, thank you, Vlad.
Yeah.
All right, cool. So like I said, you guys can see we're bearish, and we wait for the bullish market to start picking up, and that's when we're gonna start marking up our order blocks internally for the buy here, and that's what we're gonna be doing internally in external and internal order blocks right here. Okay, and like I said, for example, here you guys can see, how do I know that internal is bearish on the 15 minutes? Because market have done two breaks on the pullback. So here we have the first break number 1. Okay. So until now, I just understand that this first break is just a pullback in liquidity. When market do the second break right here, which is gonna be right here, right here, that happens. This one right here, right? At that point here, with this second break, I know that we are bearish internally because of the two breaks. And it's going to make more sense because we actually going to be paying attention a lot when it comes to what market is doing on the pullback. Because based on that, we're going to be applying our type of entries and we're going to know exactly how to react or what to do exactly when market get to a certain level with the type of entries. Because if market is not bearish internally, you don't need to see a lot of confirmation for you to look for a setup because you're still bullish externally and internally. But if the internal is bearish, like 15 and 5, then we have to do something different in order for us to approach to look for a setup, if it makes sense. Okay. So that's basically when we know exactly when market's doing we have a bearish momentum when we have the two breaks on 15. Okay. So that's basically what we talk about when it comes to the order blocks. As I said, if it's going to be for buys or bullish market structure, our order blocks are going to be the last bearish candle that create the new break of a structure. It could be internally and externally, but the internally order blocks, we're only going to mark it up when they are aligned with the main structure. If it's buy, we're looking for internal order blocks for buy. And if it's in sell, then we're going to be looking for those minor order blocks for sales only, okay? So when it comes to liquidity grab, the liquidity grab, I can see liquidity grab in two types, okay? There's going to be liquidity sweep and there's going to be normal liquidity. So liquidity sweep is going to be pretty much when market try to breaks below the previous high or low. So one thing that we have to keep in mind, guys, is, as well before we do this example, is that in every single high or low on an uptrend, you're going to have liquidity levels. So when we're creating higher highs and higher lows, every single high or low is going to have liquidity below the levels right here. Okay. So for an uptrend, in every single high or low, you're going to have liquidity. And every single lower high on a downtrend, you're going to have liquidity resting above this lower high or resting below the higher lows right here. Okay. So when it comes to a set, there's two types of liquidity, sweep liquidity, and a normal liquidity. Okay. So let's say market create a new higher high right here. Boom. You have your higher low, your higher high, and market try to breaks below here, but it fails, right? And do like this, something like that, and then market close above the level here and do a wick surpassing or basically lower than the previous high or low. At this point, we're gonna call this liquidity sweep because market sweep the liquidity here and actually end out closing above the level right here. Okay. And there's going to be another type of liquidity, which is going to be a normal liquidity, which is going to be the one that actually market end out closing below it with a body candle right here. So if market do this and breaks below the previous high or low, that's going to still be a liquidity graph for us and or a pullback. And that's what I meant by if I have only one break, I'm going to count it as a liquidity graph and pullback and not as a break. When do I know it's not a break? And I mean, it's not a liquidity grab and it's actually a change of character or a break of a structure. When I see the pullback right here, lower high, and another break right here. At that point, I know on that specific time frame, because as I said, you're gonna see this kind of thing happening in every single time frame. If market do this like that, then definitely you're gonna have a change of character on the 15 minutes time frame with the second break. Okay. So like I said, there's going to be two types of liquidity sweep, which is going to be the liquidity that market try to breaks below the level here and it fails and do a wick and close above the level. Okay. And the other liquidity is going to be a normal liquidity, which is going to be market try to break in below the level and actually closing below it with a body candle. But one break, just keep that in mind, guys. One break for us is going to be only liquidity grab or a pullback. And when we actually have the second break, that's when we're going to know that market's already bearish internally on that specific time frame. Okay. So same thing example for sales here. So we can go into real chart. Okay, same thing. On the lower high, if market trader breaks above this level and it fails, like this, and do a wick, that's gonna be a liquidity sweep. And when market actually close above it with a body candle, it's gonna still be liquidity. As I said, one break is only liquidity grab and not a change of character. When we know that it's not a liquidity grab, when we have the next break to the upside, at that point, we know we're bear bullish internally here on that specific time frame. That doesn't mean we're gonna be looking for buys. It just means that market is doing a deeper pullback and internally has changed character change basically from an uptrend to a downtrend right here. Okay. Does it make sense for everybody here?
Yes.
Mhm.
Still
All
trying
right.
to grasp it. Sorry about that.
All right. So right here, we're gonna look for one thing you got to keep in mind is that there's gonna be liquidity in every single time frame. 1 minute, 5 minutes, 15, 1 hour, 4 hour, daily. Every single time frame is gonna have liquidity resting below the higher lows or above the higher highs. And I mean the lower highs. When you guys have liquidity, we're only gonna be focusing on the liquidity above the 5 minutes. Anything below the 5 minutes doesn't work that great. Okay, I've been texted that before, and it doesn't work that great. So we're gonna be only looking at for those liquidity on 5 minutes and above. 5, 15, 1 hour, 4 hour, daily, and so on and so forth. One thing that you have to keep in mind is that yeah, we're gonna mark up the 4 hour and the 1 hour liquidity because sometimes they grab it, but mainly market actually grab the liquidity on 5 and 15 because that's the one we're gonna work the most on the 5 and 15 because those are the one the market actually target the most before doing a move. So we have to pay attention to those ones. So that's why we're gonna be working more on the 15 and 5 minutes liquidity for our setups. And yes, like I said, we're gonna mark up the 1 hour and 4 hour, but mainly we're gonna work more with the 5 and 15 because that's the one they're gonna be target, the most. Okay. So let's go for examples here. A liquidity graph. Okay. Right here we have a uptrend on 15. Okay. So right here we have a new break of a structure, right? Right here, break of a structure. So we have a new break. We have a new higher high, a new higher low. So where's our liquidity sitting here? It's gonna be our higher low. It's gonna be here. So this is gonna be liquidity for us. Okay. One thing that I forget to mention, guys, the liquidity graphs or liquidity not only gonna be sitting on those higher low that actually create a new higher high. It doesn't have to create a new higher high for you to have a higher low with liquidity. So let's say a market do a higher high right here and do a higher low and do a double top here, and it fails to create a new higher high. And still, you're gonna have liquidity below this higher low. That's what I mentioned yesterday. That even though it's not a valid higher low when it comes to a structure, because I'm gonna mark on my swing low, which is gonna be this one, as it was the one that actually created a new higher high. But still, this higher low here internally is going to be liquidity for us because liquidity is located in every single higher low. Doesn't matter if the higher low has created a new higher high. Okay. The same happens on the downtrend. The lower high, even though it haven't created a new lower low, it still has liquidity above that level. Okay. Because the liquidity, as I said, is in every single higher low on an uptrend and every single lower high on a downtrend. Okay. So we're gonna go continue with the example here. So clearly we have a break of a structure. So this is my higher low. So that's liquidity. Okay. So right here, you guys can see we have a new higher high, but we failed to create a new higher high right here. You guys can see we didn't break through it, but still we have a higher low internally here. You guys can see we have a higher high. We have a bearish candle here. So higher low, and then market try to break above it and it fails. But we have what we have here below this higher low. Liquidity. Okay. So we're gonna do this, mark up liquidity, and then market grab the liquidity right here. So what type of liquidity is this one? our normal liquidity, right? Because market actually end up breaking below it with a body candle, okay? So what happens here? Market end up giving me just one break. So one break, what does it mean? Liquidity grab or a pullback. So we're still bullish here on the 15 minutes. So market grab liquidity, go to the order block, and then what happens? We continue on the bullish momentum, right? Why? Because the 15 minutes never change to a downtrend. We only have the liquidity grab right here on the previous high or low. Grab the liquidity. It just give us one break, and one break is just a liquidity grab or a pullback, and then continue the upturn right here. So one more time, we have a new higher high right here. Boom. So where's your liquidity here? The high and low, which is going to be here. Do we have liquidity here as well? Who can tell me if we have or not?
I think so.
So
I think we
order book,
do.
isn't it?
You sure? Remember that every single high and low has liquidity. Do you see this is a higher low for you or a lower high? I mean, a higher low or a lower low here?
It's a lower low.
So that's no liquidity. So for you to have for this to be liquidity, market had to give you a break above the previous high, which is going to be here. But before that break, that happens to be here, market actually create a new higher low right here. Bearish candle, higher low, and a new higher high. So this is not liquidity for us. This is going to be liquidity. It's going to be on the buy side. It's going to be in every single high and low. Okay. New break of a structure. Where it's going to be liquidity on the previous high and low, which is going to be this one. You guys can see that I'm basically following the price and looking out for the most recent liquidity, marking it up. Because as I said, sometimes the market's not going to be looking at to grab the liquidity on the 4 hour and 1 hour. Mainly it's going to be targeting the most recent one on 15 and 5. And sometimes it's going to do the most recent 1 hour and 4 hour. But mainly it's going to be 15 and 5 most of the time on a daily basis. Okay. So here I mark up the liquidity. But that doesn't mean I don't have liquidity below this level right here. Because it's a high and low. And every single high and low has liquidity. Okay. So I mark it up both of them, or you just mark up the most recent one and let it just be like that. All right, let's see. All right, so you guys here based on what we just went through, can you guys tell me if we have a new recent liquidity here formation or not? Do we or not?
It's tricky.
Think so.
I mean, just say. I mean, I said you guys. Yeah, I mean, I wouldn't take that one because the higher low have to be the lowest point of the pullback. So my liquidity is gonna be here. Remember that I said even though we don't have a double top or a new higher high, if you have a higher low, it has liquidity on the level. So here I have a higher low, and that's what I need. So there's liquidity below that level right here.
Is this bearish candle on the left hand side?
Which one?
be
Can you
considered-
do the annotate so I can see exactly?
How do I do that? Oh, here. So this candle here can be considered as a order block.
Yeah, that's our order block.
Mhm.
All right.
All
So right here we have the order block, and this is our high or low, right? Do we have a new low, a new high or low here in a new liquidity formation? If you guys can tell right now. Yeah. So here we have another high and low. So there's a new liquidity right here. Okay. All right. So what type of liquidity as of right now, what type of liquidity we have right here?
It's a sweep.
Exactly. Why? Because the market never closed below with a body candle. I mean, as of right now, because we don't know if it's gonna be another candle, but as of right now, we have a sweep liquidity because market went through here, grabbed the liquidity, and never closed below with a body candle. If it would have closed below with a body candle, it still is liquidity, but it's a different type of liquidity. Okay. And you guys can see we're pushing up again. And this is what happens with what I just went a couple minutes ago. If we just say, okay, you know what? My liquidity is going to be all the way down here. I'm going to be waiting for the market to grab the liquidity for me to look for a setup here. When market is literally giving you more recent liquidity above here. If you don't do this, then definitely you're going to be missing a lot of good setups just because you want the market to do a whole pullback, like almost an 80% pullback for you to look for a setup. If you do that, that's fine. Like I said, there's nothing bad about it. But if you want to be looking out for good setups every single day and have the chance to get the best out of the market, even though it cannot be like those 1 or 10 like a lot of people just look for, and if you want just a quick 1 or 2 or 1 or 3, then definitely that's what you have to do. Mark up the most recent liquidity because market is going to be targeting the most recent one. Okay. So here you guys can see I mark up the most recent one, and that's the only one. Not even this one actually got swiped. So the most recent one, if I wouldn't mark up this one, then I wouldn't be able to take the trade. Because one thing that you have to keep in mind here with this strategy, guys, is that if there's no liquidity grab, there's not setup for us. No matter how good the setup might be, if we don't have that liquidity grab before, and we cannot get involved into the trade, because if you get before a liquidity grab, then you're definitely gonna be the liquidity grab on the market. Okay. So here you guys can see another liquidity, and then we go up, another higher high. So where's gonna be liquidity located here, guys? If you guys can tell me.
On the higher low.
Yeah, that one. Okay. All right, so we have liquidity formation here, yes or no? Do we or not?
We don't have bearish candle.
Yeah, we have a bearish candle, but we have a bullish candle. So the bullish candle give us the confirmation with that we have a higher low. Because bearish is pullback, bullish give us the confirmation that there's a higher resistance here or support. So that's a confirmation of a higher low. So even though, like I said, doesn't matter if we have a new double top or a new higher high, if it's a higher low, there's liquidity here. So that's we have liquidity below here. So what market did here? Drop liquidity, right? So right here, what happens was the market grabbed liquidity, right? And it fails to go a new higher high and then give us a second break right here. Because you see, guys, how this one actually break above or below here. You guys can see, right? Bullish candle, grab the liquidity. So the first liquidity, the first break was what? Liquidity, right? Or a pullback. So here we have our liquidity grab, market push up, and it fails to create a new higher high and do a second break. That was my swing here. That's my second break. So at that point, market end out getting bearish on the 15 minutes internally here. So what we need to do, of course, we need to wait for the market to get bullish back again. So here we have the market breaking above the level here, breaking our favor. It's going to be here. So why I cannot mark up here as my break? If somebody can tell me.
Because we didn't have a body candle close above it, right?
Exactly. So what do we have here?
We have
That-
swipe
Liquid transfer.
Exactly.
We transfer the liquidity.
Exactly. So we're gonna move. So the break actually happens here. That's when actually market close above it with a body candle. So now at that point we have a new break right here, internally, right? So that means we have an order block right here, right? And we also have a higher low, which the same candle, the same higher low that has the order block, it could be also the liquidity below it. So we can have order block and liquidity on the same candle right here. All right, so here you guys can see it push up, and then we have a new break of a structure or a new higher high, and then we have this higher low, which is going to be liquidity. another higher high, another higher low liquidity, another higher high, another higher low liquidity. Okay, so here you guys can see that this is our liquidity, but didn't we create a new higher high here, a new higher low here? Yes or no?
Yeah.
Yes,
Yeah,
right?
I think so. Yeah.
Yeah, because we have bearish and then a bullish candle. So below here we have a liquidity grab. So what we have here, liquidity grab. What type of liquidity is this one? A normal liquidity.
Normal.
Yeah, exactly, because
Normal.
it breaks above below the level here. And then we have a push to the upside right here. You guys can see that's why looking out, you guys can see that market, yeah, it's pushing up. But if you just get it on patient and start looking for setups without liquidity grab, market can easily just do this, grab all those liquidity that have the left below, and then going into this order block and then give you a buy. And you say, fuck, market stopped me out, even though I was right on my direction. And when that happens, it's most likely because you are now waiting for those liquidity grab to happen first. Okay. That's basically what we're looking at for liquidity grab here, guys. We're gonna be looking at for extending on the 5 minutes sometimes. And I mean, not sometimes. Sometimes we're gonna do it on the 5 minutes as well, the 1 hour as well. But you guys can see that if you just focus on the 1 hour and 4 hour liquidity, definitely want to be missing a lot of good opportunity, because not always market's going to go into this big liquidity like 1 hour and 4 hour. So that's why we had to go into 15 and 5 to look for the most recent one, because most likely that's where market's going to be targeting those liquidity. And like I said, just recapping, it doesn't matter if the higher low has a new double top thin or a new higher high. If it's a higher low, there's liquidity below it. If there's a lower high, even though it doesn't have a double bottom or a new lower low, if it's a lower high, it has liquidity above it. So we have to keep in mind at all time, because if you guys sometimes might see, oh, we don't have a double top or a new higher high, but you have like this kind of thing, you have a bearish candle and then a bullish candle, that's a confirmation of a higher low, and below it there's a liquidity grab, and that's what you have to always keep in mind in order for you to mark up your liquidity grab the right way. Okay, so I don't know if you guys have any questions for today.
Yeah, just going back through the day today, when you started your trade in the morning, you gave us the buy on US 30 Dow Jones. So the first thing, you got the confirmation on the 5 minutes, and after 5 minutes candles, you said, let's go for break even, guys. Can we go back to this trade and explain what changed your mind and you asked for a break even, and you were right when you said it will grab liquidity, and after like 10-15 minutes it went down for another 50-60 pips. So if you can go back to today's trade and explain it more, please.
Yeah, go ahead. I'm just gonna go back again. So and back again here. All right. So here you guys can see it's gonna be making sense. We have our order block right here. All right, we go into the 5 minutes. So first thing like I did was just waiting for the market. It's gonna make more sense when we go into like the type of entries and things like that. But I'm gonna do a quick example so you guys can understand. Okay. So here you guys can see that we have a break in our favor right here. So what it means here, we have a break of a structure. I have a liquidity grab below this higher low right here. Okay. So what I wait for is liquidity grab first. So market grab liquidity here, going into this 5 minutes order block, and also the 4 hour order block, which is also here. And I take the buy once market break above this level right here. Fuck. This break above here. Yeah. So why did I actually call it for break even too fast? Because here I still bearish on the market. So market is literally kind of too bearish right here. And I wanted just to make sure that this level that happens to be here, it wasn't a liquidity grab. Because remember, if you're looking for sales, every single lower high has liquidity. And what exactly is this? A lower high, right? You have a lower high and a lower low. Make sense? So if this liquidity, right? If I see in this, we have a lower high, and I know market has dropped too much in the morning, I have to be aware of that specific thing right there, and not just blinded go for buys and just, okay, it's gonna be like I said, a stop loss or break or TP. That doesn't work like that. Okay, so that's
Okay,
why
so
I call it.
basically, okay.
Right. So market basically go there. You see, grab the liquidity right here, and then basically pull back again here. I say, okay, you know what? Let's call it break even. So what happens next? I have
Yeah, okay, but 1 second, Vlad. Why
Okay.
after this candle, this one, you call it break even? Like, what changed here? What changed your thoughts? Because we got the body candle close above your the liquidity here. So why did we go for a break even?
because remember that this is gonna be, first of all, I just went through why I'm thinking that I have to be caution when it comes with this trade, because market has dropped too much and we're literally bearish here. Okay, so I'm going against a kind of trend trade, kind of, right? And I have to be aware that we just grab liquidity above this previous lower high. And we have a level here, which is might be an order block for us. So liquidity grab in an order block in a downtrend structure is telling you that a lot of sellers are gonna get involved here. So I say, you know what? If market come back again to this level, that means that there was not enough buyers that get involved into this trade right here. So I don't want to get involved here. Okay. So when you do the pullback and stop me out break even, or we close a break even, I understood the market needed to do another pullback right here. Right. And then grab liquidity one more time right here, and then we take it one more time. That's when we actually close a 101 right here. Okay.
Okay, so okay, can you just pause your screen? You were looking at this liquidity again, right?
Yeah, this one right here.
Okay,
Right here. So what happens here is that the market actually grabbed this liquidity, which was the main liquidity I wanted the market to grab, because that's the swing low that create this kind of uptrend structure. So what happens here is market grab the liquidity. You guys gonna see, boom, and then what happens? Boom, go up right here. See,
so
that's
for
what
liquidity swap.
exactly. But we never know which one is gonna be the liquidity is gonna work. This one would have worked perfectly because it grabbed liquidity here, and that's what I take the buy and end up being going a 101, or it would be this one right here that actually end up going up like crazy.
Okay,
we don't know which
this
one.
Candle was a confirmation for you.
The break
Vlad?
above here. It's gonna make more sense, like I said, when you guys understand. We're gonna talk about tomorrow about the entry part, but with the break above this level, that would be the confirmation right here.
Okay.
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 But does it make sense? I mean,
Yes,
kind of sense
somehow
because
things now. Okay.
huh?
Yeah, like I got the confirmation I want. Yes, thank you.
All right.
So Vlad, the initial one you took, did you go for a break above here, somewhere here? When the liquidity was grabbed over here?
You can mark it up, bro. I don't see anything. So
Oh,
good.
wait, I don't know. I don't know how to do that.
This I annotate. So let me just mark it up. Let's here. You said here.
Where you have the bottom liquidity line.
Here, this one or this
No,
one?
yeah, that one.
Yeah. So I take the buy when market breaks above this level right here. Right here.
Okay,
so I
yeah.
enter before candle close, something like around here. Right here, like around here, boom, and take the buy. That would have given me, and then when market do a retest, I enter more positions here, and that's what gave me the 101 here, or a little more than 101, but I close partial 101, and then market pull back again here and close me a break even. Okay. Like I said, it might get a little complicated here, guys, but tomorrow you guys are gonna understand more when it comes to the type of entries and the confirmation, because this is all about, you might see a lot of noise here, but it's just clearly when you know exactly what you're looking for and when you want the market to give you exactly on those levels for you to look for a setup. But tomorrow we're gonna talk about that price action, the type of entry and everything. But you guys have any questions regarding liquidity grab order blocks right now before we go?
Oh, we're good. Thank you.
Yeah, I think I'm good. I think obviously once we watch the game tape over, I'll probably have more clarity. I think I'm probably just overthinking it a little bit, just because it's just it's going a little, is in real time the way you're going about it. But I understand where you're coming from. I just think it just for me, I think it's just all about just trying to understand plays when it comes to liquidity grabs on a bearish and also on a bearish. Also one quick question. Will we still be able to get access to your group when you do live trades? Is that
Yeah,
still
you guys gonna have access. What I just want, I mean, if you guys want to do it now, I can send it over so you guys can sign up. You guys are gonna have 1 free month to go for it. But I always recommend you guys to do like at least know the strategy. So when we do the live trading and everything, you guys understand what I'm doing, and that help you to understand more, like maybe your analysis when you're doing by yourself. Like that's basically what I recommend everybody. But if you guys want to do it now, I can send it over. And you guys can
No,
get
I mean,
access.
whatever's best for you. I mean, I reason why I ask is because I'm a very visual person, and I know like me if I see you doing a live time, just how you broke it down.
Yeah, because
like,
on the live trading, I just do boys. I send the idea
Okay.
on the chat, and then I give the instruction through my boys. So I say, oh, you know what, guys, because not everybody knows the strategy on the group. So it's
Got
just
you.
like, you know, but when you know everything and I send the idea, you already know exactly when you know the strategy, when you have the whole picture, you'll know exactly what I'm looking for. And then that give you more confluences and more confident when it comes to take your own trades. And you'll know exactly what I did and what I did wait for, you know, everything, but you need to know the strategy. That's why I always recommend everybody to wait at least to understand the whole strategy before getting in. But if you guys want to do it now, that's fine. That's up to you. I can send it over. You guys can sign up.
I'm good at the way that makes sense. I had the impression that you probably mark up your chart during your trade sessions, but if that's not the case, then I could wait. That's not a problem.
All right.
I already paid. I'm already in.
I mean, if you pay for it, bro, I mean, just let me know. I send it over. I send a refund back again, and
no, maybe next month, the second month for free. I don't care about it. Like the same.
Yeah, I actually also paid. Just trying to look and see where things are too. So that was where I got some of the information. So maybe then next month, once
I'm happy with it. So I don't want the refund. I'm happy.
All right, cool. All right. So yeah, guys. I mean, go over the video one more time. I know you're gonna have questions and everything. And tomorrow we're gonna talk about price action and type of entries. That's what we're looking for. You know, this type of thing. Like once we get to the order block, what we're looking for in order for us to get involved into a trade. And then after that, we're just gonna go through trading plan and risk management and all that. And then you guys gonna be good to go to start doing the back testing. And then we're gonna do a whole back testing until you guys master it and be ready to just go live in any account that you guys might go for. Okay.
So good.
Thank you, Vlad.
All right, guys. Take care. I see you guys tomorrow. Okay.
Thank you very much.
All right, y'all.
Okay.
Everybody have a good night.
All right, bye-bye.
Bye bye.
Bye bye. Bye bye.